Hello, everyone. Welcome to our September Roundtable. We are back here with I'm the editor of Move Smartly, Urmi, and I'm back here with my colleague, John Pasalis of Philosophy Realty here in Toronto. Hi, John.
Hello, everyone.
And as always, our friend and colleague, Steve Soretsky out in Vancouver with Open Realty. How are you, Steve?
Always a pleasure. Looking forward to it. Back into the fall market.
I know it's exciting.
So how is the fall feeling so far? What does it feel like in the market, Steve? And what did the numbers say? Or are they saying two different things?
Yeah, well, I mean, in terms of the fall market, I guess we'll see how things shape up here. It's obviously too early to tell, but I think we'll be keeping a close eye. I think the big story will be on inventory, on new listings. That's kind of what I'm looking for. So, I mean, if you look at the August numbers, I don't think it's, I mean, probably similar to maybe John would agree with me on this, but I don't think it's going to tell us a whole lot. I think it tells us kind of where the market was and has been, which is that, from a seasonal perspective, the summer months are always slow. And so I think the next big test is really just the fall, right? I mean, that's typically your uptick from a seasonality perspective. If you're going to sell a home, September, October are typically pretty good months. And so that's really going to be telling, right? Is are we going to get like any sort of uptick? How's the listing side going to look? How's the demand side going to look here in September, October with lower mortgage rates? Because if there is no real uptick and inventory just kind of keeps coming on and piling up, well, then you're getting into November, December, January, which historically are really slow months. And then that means basically as a seller, you're waiting until probably the spring market for any sort of glimmer of a turnaround.
Are
But yeah.
and are you sensing anything, or do you feel a little busier? Are you starting to see some of those buyers getting more active after the summer, or is it still so early in September?
It's funny. Like, I mean, John and I were talking about it before we hit record. Like, we feel like we're busy from like our business. Like the business itself is busy. I mean, in terms of like the market, I mean, I don't know if I'd say it's a busy market. I mean, if you look at the sales figures for August, we're something like 26% below the long-term average in terms of sales. This is some of the worst sales that we've seen next to August of 2022. If you remember that was at the peak of the rate hiking cycle when Tiff Macklin was dropping 100 basis points at a time. So sales volumes are still really weak. I think we're still seeing most of the weakness, I would say, is concentrated in the condo segment where the investors are located. And so if you look at entry level single family houses, those are still moving okay. Still not that much inventory there. So again, I still think it's a tale of two markets right now, which is the investor, which has been so active in the market over the last 3, 4, 5 years, I think is more or less non-existent.
All right. Thanks, Stephen. John in Toronto, same question to you. What does it feel like? Are you sensing a pickup either in buyers or more listings coming onto the market? And what do the numbers say?
Yeah, very similar trends with Steve. And I agree with Steve. August data, doesn't really tell you that much. Usually it's the end of the month. A lot of people cancel their listings. So things can get a bit messed up in terms of inventory. But generally the trends are similar. Like sales are down, inventory is up. The one interesting trend is that, we saw a slightly bigger drop in average condo prices. So past few months, like condo prices year over year were down about 1 or 2%. August, we're down 6%, which is a little bit more pronounced, obviously. So we'll see if that carries through to September. But Steve's 100% right. Like this September is like when people start to search again. In our business, a lot of clients who were even active in the spring kind of hit the pause button in July and are like, you know what? Leave me alone for 2 months. I'm going to go to the cottage. You're going to go on vacation. I'm sick of looking at homes. Call me again in September, right? And new buyers often enter in September as well. So we'll see what the volume of kind of demand is relative to new listings. Steve's right. My instinct is the low-rise market is going to probably pick up a little bit. I have a feeling, and by low-rise, I mean like semis, detached, townhomes, probably a little bit busier than what it was in the summer. Where the condo market's a coin toss. I mean, we don't really know. It's a bit harder to tell because we could see more people listing. And as Steve said, it's a lot of investors were driving that, and they've largely kind of pulled back quite a bit. So we're not seeing that demand.
I just want to chime in there quickly because I think there's like an important distinction here. Like I look at the home price index for all property types in Greater Vancouver, and we split this out between detached and condos. It's pretty similar. So we're down. Prices are 0.9% lower than they were 12 months ago. So it's like it's pretty surprising. Like I mean, it's weird because like it's a slow market. There's not a lot of transactions. There's a lot of pain in some segments. But when you kind of like zoom out as a whole, like it's kind of just like a boring, slow, stagnant market. You're not seeing like the big headlines of like, oh, prices are down 20%, 25, 30%. Like it's not like that. But I think there's definitely pockets of the market where like, wow, like there's no bids there, there's pain there, there's big losses there. But I think when you zoom out as a whole, the market's pretty flat.
I mean, it's interesting because it's been largely flat for 2 years, right? Because the big decline in prices happened from like the beginning of 2022 to like the summer of 2022, at least in Toronto. Prices fell like, I don't know, 20%, partly. And we've talked about this. It's like people got caught up in the frenzy, bought a home, had to sell, were distressed. People were caught up in two transactions. So that's why we saw such a rapid decline. But since then, I mean, yeah, it's largely been flat, which is a little surprising because for most of that period, we've had like 20-year low of sales largely, right? So, and obviously there's these many peaks, like the market rebounded a little bit beginning of 2023, but yeah, it's been kind of a flattish market.
John, when you see like these big, and I'm just curious from like an outsider's perspective, but when you see like some of these Twitter accounts, for example, that highlight like huge losses and buyers walking away from their deposit, is that just like a particular product where you're seeing like these big divergences between price paid and now like they're reselling at this big loss? Is that typically just someone that bought like a pre-sale in the suburbs at like the peak and now like they've closed or they're closing and they're reselling at a significant loss? Is that pretty much the gist of it?
I mean, my feeling is, yeah, I mean, people are picking out outliers. So if we think about like from the peak to now, average prices are down, say 20%. Well, if you bought at the peak and you overpaid even at the peak and you're selling today, you're going to be down like 30%. You know what I mean? And on a $2 million home, that's a lot of money. So yeah, I mean, certain people I mean, they're kind of fun stories. You know what I mean? They get a lot of clickbait. They're down 500,000, but I mean, prices are down from the peak. That's the reality. But again, most people who bought 2 years ago aren't selling today, right?
Yeah, that's a good point. I mean, I think like I know from my experience, like on the ground here, was like I remember sort of at the January, February peak, it was like, you'd go to a client and it'd be like, listen, the market value of this house that you want to buy is 1.6 million. Like that's the market value, in my opinion, based on the sort of the recent comps. And those comps are obviously inflated too, right? Because those comps have been pushed up over the last 12 months.
Yeah.
But it's 1.6. But by the way, there's 7 offers on this house. And so if you want it, if you really want it, you're probably gonna have to pay 1.7. And like that was just, you know what I mean? So it's like almost like you were forced to overpay at the peak if you actually wanted to transact.
Yeah.
So I'm assuming, yeah, if you ended up paying that 1.7 right at the tippy top peak, yeah, maybe today you're reselling at a 1.5.
But that's how prices accelerated so quickly leading up to that point, right? Because in Toronto, it was like there are 20, 25, 30 people bidding. I mean, every home was selling for like 50 grand more than what the neighbors sold for 2 weeks ago, right? It was totally speculative leading up to that peak for sure.
Well, yeah, I mean, that's sorry to interrupt.
Like
Just to
exuberance. Yeah.
go back on that, right? But I know like when people look at back and like in hindsight, but I've always said when people fear that they're going to get priced out of the market, out of shelter, which is like a basic human need, I think people will do crazy things. And I think that's what we saw, right? Is like, if you didn't pay 1.5 today, it was like, well, it's going to be 1.6 next month. So like, may as well just get to the 1.6 today. And so that was really the mentality.
Yeah. I mean, those are the markets that actually I'm more fearful of usually. It's kind of when everyone's greedy and optimistic and are paying 50 grand more than the neighbors that
Yeah.
I worry about more. Cause you're thinking this is gonna go. Like it cannot keep going like this, right? So yeah.
Well, real estate's an interesting market. I'm not sure how many markets have the dinner party contagion phenomenon
Oh
cited
yeah.
in an actual Nobel Prize winning research
Yeah.
on how people behave. I
Yeah.
think the problem with homes is that if you hear your neighbors, your in-laws, your
Mhm.
brothers, your sisters got in, and there's a lot of FOMO, more than even like a stock that your friend got and you've missed out on. So it is this widespread sort of sensation. I also wonder, could part of these big headline makers be that part of the mortgage holding market that experts have said, listen, there are some mortgage holders on the margins, these very high interest rates coupled with them going to other lenders. You're going to see some people fail to
Mhm.
close transactions and not be able to. And I wonder if that's part of it. Like some of these, the biggest losses are people in that precarious financing situation.
Yeah, certainly. I mean, I think it's not like closing's one thing. I mean, I think some of those people who bought at the peak who have to renew at, much higher rates are going to have challenges. Again, I mean, I think we're going to have to see how this all unfolds. I mean, the theory is you're going to see these mass exits of the market. I don't know if that, I mean, we're starting to see that to some extent in the condo market. But again, from my experience, most of them are not like distressed. They just want to get out. They're just like, many of them have capital. And they're just like, I want to move on. So we'll see how that plays out. Again, I think that's the theory, that you're going to see all of this distressed selling, but it's hard to say how that's going to play out.
I think that's a good point. But we see it like in our business, it's just like people wanting to like they're calling and reaching out to us and saying we want to lighten up the portfolio, right?
Yeah, that's usually what we see.
Yeah, it's like people that have accumulated 3 condos over the last 15 years. And it's like, well, it's been a good run. Let's free up. Let's of the 3, let's sell 1, and take that cash and redeploy it elsewhere. So, man.
And I will add, I mean, I get quite a few calls from people who made, I mean, quite frankly and objectively, really bad real estate decisions. And, at the peak, got over leveraged, bought too many properties. Again, weren't working with us. They kind of called me like 2 years later. And they're sitting on properties that are worth way less than what they paid for them. They got a mountain of debt, like and when you're like, well, are you going to sell? You're going to be down 20%. Most of them are like, just want to get by basically. People obviously don't want to take that loss. So are some of them going to be forced to sell? Potentially, but again, we'll see how many of those there
And
are.
John, that's why I always wonder, like, if you go into this market where you run into like a 1990s scenario where you kind of have like the market base, more or less, it chops sideways for 10 years. Like you get little ups, little downs, but you kind of average it out. There's really almost no price appreciation over a 10-year period.
Yeah.
And I think for a lot of people, I think that would be quite painful, right? Because like you said, it's like, well, I don't want to take the $100,000 or $200,000 loss today. I'll kind of hold out, hope that maybe next spring is better, and maybe it's not. And then 2.5 years from now, they're like, well, I'll just realize my $150,000 loss today.
Yeah.
So I think that's going to be one of the interesting stories. And we kept being told that as this historic rate hike cycle happened, that there was a tranche of holders that were going to be resetting their mortgages. 2/3 are coming this year, 2/3. So far, people have been hanging on. Even investors you think would be in trickier situation. Obviously, households just cut every other expense they can, and maybe that's why we see a lot of downturn in other parts of the market. Economic softening that led to Falkland today, Bank of Canada governor to announce another rate cut in Canada. So this is the third consecutive one. This brings their key rate to 4.25%. And there was a signal. So the bank brought it down 25 basis points and signaled if this economic softening continues, there may be more cuts to come. So what does that do to, on top of the trends and the feelings that you guys have just described? What does that do to the market?
John?
I think we talked about this. I mean, I don't think it's going to have a huge impact in the fall personally. I mean, I think certainly it's maybe moving some buyers off of the sidelines and thinking, okay, I can get a slightly better rate. You know what? Get in the market now. I'm not going to lock in for 5 years, lock in for a year or two so I can renew at an even lower rate. But, the market's sluggish, so we want to get in. I think so. There are, I think, some people who feel like they want to get ahead of the market because some buyers I talk to think like the longer they wait, certainly if there's another 6 rate cuts by next spring, will the market be a little busier? I mean, again, possibly. I think that obviously depends on, we've talked about sort of what's going on economically. What's the job market like, all of those things. But I think, even in a soft labor market, you're going to have people who still have jobs and need homes. I don't think we're at a 20-year low in sales. So, any little, even at a little increase, you don't need to get back to traditional sales volumes to see that little bit more demand kind of pull the inventory out. So I suspect we're going to see a little bit more. And I think that's why, we'll probably see a little bit more demand on the low rise market. And that's kind of why I thought low rise might be a little bit busier, because the numbers, even with three, 4 cuts, like for investors, still doesn't work. Right. So condo demand is still going to be sluggish.
It's so crazy. Like when you look at like the charts and the data on the two segments, like, our good friend Ben Rabideau, I know, always puts these together, but you look at like building permits for single family homes in British Columbia, or like housing single family like completions, again, low rise, like they've been just on a straight downward trend for the last 15 years. And then you look at like the condo segment, it's like all-time record units under construction, record completions, housing starts are still elevated. And so they're two very different markets. So yeah, I mean, I don't know. I tend to think, John, it's like, feels like any sort of like uptick in demand, I feel like it should sort of materialize first, probably in that low rise.
Yeah. And, I've had people ask me this, like, can those two markets do different things? And my instinct is, yeah, I think they can, because they're not like direct substitutes, right? Like, okay, yeah, you're going to have some people who are considering a 1,200 square foot 2-bedroom condo or a starter home. That's a small segment of the market. The highest share of condos in Toronto are like 1 bedrooms, right? Like you can't get a 3-bedroom condo for a family. So it's not like you can substitute from one to the other. So it's very possible you have a very sluggish condo market and a slightly busy low-rise market.
Yeah, that seems about right to me. I mean, one thing just to touch, I know we were talking about rate cuts and stuff, but yeah, I mean, I still point out to everybody that that's moving your variable rate mortgages, which, if you go based on where the market's pricing another 50 basis points of cuts by year end, that should bring most variable rate mortgages to about 5%. And we're like, I'm seeing, John, I've got clients borrowing 3-year fixed uninsured mortgages today at 4.4.
That's great. Yeah, it's not bad.
Right. So, I mean, there's still a pretty big gap between the variable and the fixed. And so I don't know if like that's going to make a whole lot of change to people's borrowing capacity unless fixed rates move lower. So, I mean, maybe from a sentiment perspective, it helps a little bit that knowing that there's probably more easing on the way.
Yeah.
John, I have a question in the GTA.
Yeah.
Is it fair to say that the best deals still, like today, and here we are in September 2024, were basically negotiated in like September 2022 or
No,
August?
I don't think so. I don't think so. Listen, I even see places now that I mean, people are gonna think I'm crazy. I think they're freaking deals. Like, and again, like in this market, like the past 3 months, like what I think are deals are not what other people would think are deals. You know what I mean?
YouTube comments are going to be going crazy on you.
Yeah, I know. But listen, I think I don't mean like the perfect starter home that's staged beautifully is selling for 300,000 less what it's worth. I mean like dumpy properties that need work, that need capital, that need to be rented, stuff that people aren't buying. You know what I mean? 100%. And that's kind of what I'm talking about. And again, that's not what the average person is going to buy. But when you look at some of these properties, 100%, some of them are selling for significantly less than what they should because there's no bids on them. Like there aren't people buying to build very much right now, right? or even end users to top up and build their own home. So like many of those properties that need a lot of capital are selling for what I think are less than what they should. And again, this isn't a rule like every home's selling for a discount, but there are some that are selling for way less than what I would have expected.
I think that's like so true here as well. Like if you get a entry level move-in ready house that like looks good, you really don't need to do anything to it. It pretty much sells at full pop, and might even still go into the odd multiple offer. But then you get like all the other houses that are just like they need work, they're a bit funky. Maybe there's only one washroom, so you got to add a second washroom. So you got to spend another $60,000 at like people that where you actually have to spend some money to get the house in like a nice livable condition are basically, in my opinion, almost going no bid.
Yeah, they are. And listen, the ones that are selling for a deal are the ones that just need to sell. They just need to move on, right? Because there are a lot of those homes that I'm talking about that are sitting in the market that are overpriced and no one's buying, which is contributing to the surge in inventory, right? So it's not like all of them are selling at a discount, but some are because the sellers just don't care. They need to move on. It's they just need to sell and leave, basically. So yeah, I think it's that segment.
But to the outsider or to the common consumer, this is quite a change. I mean, one of the most dismaying feelings in Canadian real estate, especially in Toronto, Vancouver, has been dumps going for absolutely high prices. You finally reduce your own, I guess, what you were hoping to get in a house, thinking, okay, I'll move into this segment where things are not as beautiful, only to be outbid. And now when we see a lot of that investor activity taken out, a lot of that other development activity, other people competing to redevelop the homes, it is actually making a bit of a difference. And so I guess what you're saying is against a backdrop of flat prices, stubborn sellers able to hang on, even though sales are at an all-time low, there's going to be a few of these people that need to sell. And you can't afford to stay sticky if you need to sell.
For sure.
And this is not really the environment for it, right?
100%. We could do a whole segment on stubborn sellers. We should do that one. I got lots of examples.
Okay. And then I can do it on opportunistic buyers looking for a deal. But whenever I get super depressed, which I have to admit, sometimes working on Canadian housing a lot does make me a bit depressed. And I just have to put it down and, go out to the lake. I think this is why Canadians, we need our summer. Like we don't have much of it. We can't be all depressed about housing 12 months of the year. But when I do that, I see a headline. This one really got my interest. New York Times article here explaining why they believe that the headline specifically, why interest rate cuts won't fix a global housing affordability crisis. This article talks about it being experienced from Anchorage to Amsterdam. And it notes that the interest rate cuts that we're starting to see in Canada and around the world will result in mortgage payments that have come down, but are still much higher than what we saw in the 1920s, definitely in the 1920s, but the 2010s. And not only are these mortgage prices higher than then, they're sitting alongside higher home prices now. And the article looks at a few different markets and suggests that around the world, what is really uniting the problem, or what is the driving factor, is supply. And it talks about a Moody report that, get this, says the United States is short 3 million homes. A number that stuck out to me because Kamala Harris has now unveiled during her presidential run this bid to build 3 million homes in the United States. That's the same number that Canada is short. We are 1/10 the size. So that's an interesting note. So while supply problems are what they're blaming globally, I'm not sure they're being experienced the same. And I wonder what you make of that argument, Steve, that supply around the world is the uniting factor, not the interest rates being very low for a long time and then running up.
I mean, I don't really concur with that. I mean, I don't know. I'm curious to hear John's thoughts. I mean, I think that Canada has a structural imbalance on supply. I just think that everybody kind of says, oh, well, it's only supply. I mean, it's funny to see all these housing markets like move in tandem, right? Just because I think monetary policy almost around the world now tends to move in tandem. And I think that you're seeing all these challenges in all these markets. I definitely think underbuilding is a huge part of it, but I don't think it's the be all end all. I mean, and so I think, of course, if you drop interest rates to zero, you're going to get excessive demand. And, John, we've seen this, right, in the how much demand that's driven for pre-sale units, people speculating, paying egregious sums of dollars. And, as rates go up, now all of a sudden there's no demand. And now nobody wants to add to their real estate portfolios, and that's reducing demand. So I think housing is just such a complicated topic that it's you can never point to one thing and one solution, and every market is so different. Like, we just talked earlier about the structural shortage and imbalance on single family homes. We don't build them anymore. Right, but like, I think on the condo side, we're building tons of them. So I don't think you're going to be talking about a shortage of condos over the next couple of years. I don't know.
Yeah, I mean, for regular viewers, I'm not really sold on the supply theory. I mean, obviously, we have a shortage in Canada. I mean, when our population goes from growing by 350,000 people per year to 1.3, but we're still building 250,000 homes. I mean, obviously, we're going to have a bit of a shortage, right? But the cause of the shortage is the fact that we went to 1.3 million people per year. But, if we're looking for global trends, and again, I think this is what's interesting. It's hard to obviously pinpoint specific causes. I don't tends to agree that the whole supply thing, there's a global supply crisis. I mean, if you believe that narrative, you have to believe that virtually every country in the world simultaneously at the same time either forgot to build houses or didn't know how to build them, or like every city around the world restricted zoning to prevent housing completions. Like there needs to be this unifying restriction on supply, which I tend to not believe in. I think the more realistic story is that houses have become financial assets over the past 20 years. And when you do that, when more and more are being used as assets, it obviously stimulates demand. And I think this is one thing that is contributing to it. Again, I'm not saying this is the sole factor, but if we're looking at unifying trends, I think in the past 20 years, that is the common trend across every country, whether it's in Europe or the US or in Canada. Houses are not just homes for moms and dads and their kids. They're global financial assets. Many European countries just sell them off to get access to being a permanent resident there. We have REITs, but we have like investors are the dominant buyers again. They're growing at the fastest share. So, and again, not to say that this is the single cause, because there is no single cause, but I say that is the more unifying trend across the world, I'd say, at least the Western world.
I've always looked at it, and I've always said this, and people might agree, disagree, think it's some weird conspiracy or something, but I just look at it and show the debasement of money, which is like, if you price Vancouver or Toronto real estate in ounces of gold, which I think is money, like it shows that real estate is actually getting cheaper, which I just think is an interesting frame to look at it, because you just mentioned like real estate and housing has become like an asset class, right? And so globally, when everybody lowers interest rates from whatever they were at 1.20% down to basically zero, capital just looks for a safe haven and land, particularly in dense metropolitan cities, is a good store of value. And so I don't know, I just think, to John's point, I definitely agree. It's clearly become a financial asset, and Canada is one of the few assets where, as your primary residence, it's tax free.
Yeah. And that goes to show you it's not the case in the US. And so there's so many different variables in all these different markets. So I thought that was interesting attempt in the Times, and very interesting comments from you on that. So let's turn a little bit back closer to home. It is back to school season, and we're seeing headlines around the rental markets and what they're experiencing in Canadian university and college towns. Now, I actually came across two headlines that kind of seem to contradict each other in the past few weeks. So one was a Toronto Star headline reporting on a Desjardins report which noted that only 1 in 10 Canadian post-secondary students now live on campus in dorms. And so this report points out that 1.2 million students rent in communities around post-secondary institutions due to this lack of dorm housing. And that results in pressure in the rental market for other users of the rental market, because investors often prefer to, rent out to a house where they can put 4 or 5 students in rather than a single family, because you can probably command a higher rent.
Not 4 or 5, like 10 to 15 students is more like it. Yeah.
Unfortunately, in some parts it became that. I'm remembering my experiences. They weren't that dire. I'm dating myself. I only lived with a few roommates. But the point of this article is that this would continue to be a problem, driving up rental prices for everybody. But then we see a headline in the Globe and Mail with the headline, Canadian university cities facing surprising rental market downturn. Because it turns out that in some towns, Kingston and others are mentioned, rentals are going empty. Rentals that would normally be taken up by students, and many are saying it is the federal government's decision to cap foreign students by 35%, which is now resulting in all these vacant rentals. So it's very interesting, John. You recently tweeted that this cap has resulted in the supply we'd normally need to wait 15 years to build. So what point are you making here? I think we can guess.
Well, yeah, I mean, I think it's not even just it's the cap, but also the cut. They actually cut student enrollments by 35% over last year. And it looks like, again, I can't say I've studied every college town or university town in Canada, but at least from the anecdotes from the people in the article, it seems like there's obviously a significant pull down in demand. The article is not talking about tens of thousands of college residences being completed over the past 12 months. It's talking about fewer people looking. And yeah, my point was, of course, we've had these debates in Canada for years. Canada's been supercharging its population growth. Part of that is students. We think about our rental, for our years, the economists are saying, well, don't worry about that. We don't want to touch population growth. We want to keep supercharging it. We're just going to solve it by increasing supply, but it's going to take, 15 years to triple our housing completions. And, we're kind of seeing in literally 1 year, you take the foot off the gas and kind of move student enrollments back to normal numbers. And suddenly you don't have the supply crisis we had last year. And investors, it's kind of less profitable, like you said, to convert these homes into rooming houses for students. So, again, I think this has kind of been the challenge in Canada. Everyone's kind of focused only on zoning as the single cause of our crisis. But obviously, it looks like things like a rapidly booming, and at least in Canada, like student enrollment has obviously been a huge factor.
John, if I can boil down your thought campaign to a single sentence, it's demand, stupid.
Largely,
you're
yes.
saying?
Largely.
Steve, what are you seeing in Vancouver? Or have you heard about any of
we
these
don't have like the college
boom
towns,
busts?
stuff like that. I don't think we have like these crazy stories of 18 students living in basements. I don't it's just not really a thing here, to be honest. But I just look at the setup for like a landlord in BC, and we talked about this earlier in our segment, which was a lot of investors coming and freeing up or lightening up their portfolio of investment properties, right? And so I just look at the setup today, and like the landlords in BC, they've had it so good for so many years recently, right? Which is you've had massive price appreciation, you've had really low interest rates, so you've been able to pay down the debt much quicker. And then you've had massive rent growth. And so I look at the setup today and I go, okay, it's interesting, right? So you have all levels of government coming in. The feds are now saying, finally, we're going to clamp down immigration growth after all this pressure. So we're going to clamp that down. The BC government's saying we're going to, freeze your rents below market rent or below the rate of inflation. And you've got mortgage rates that have obviously jumped significantly, and you've got record number of units under construction coming to the market. So I just don't think like the next few years for a landlord, I find it hard. And you've got I think an economy in recession or teetering on one, and so you have to ask yourself, well, how much wage growth are you going to get? And so I just think the setup today for like landlords, in my opinion, over the next couple of years, doesn't look very good. So that's something for people to probably chew on in terms of making decisions about is adding to the portfolio today versus lightening it up. And I think that's why we're seeing a lot of investors today are opting to lighten the portfolio. And what does that do now in the supply demand imbalance?
Yeah, and I agree. I mean, it is becoming more challenging. You know, and at least in Ontario, certainly one of the big factors is like a really broken landlord tenant board where I mean, it takes you a year to evict a tenant who's not paying, for example. Like it's a disaster. And what happens is as an investor, you don't want to take risks. Like you're only going to take like the best, most likely tenant who's going to pay you, and you don't want to take the risks. And you're sitting vacant. I mean, we had one client who's been sitting, you know, kind of waiting to rent out his unit. He's had 60 applicants, but all of them are just a little bit too risky. So you're just sitting around waiting for someone decent. So yeah, it is definitely more challenging these days to be an investor.
You've seen that over the last couple of years as the tenancy laws in BC have shifted so far in one direction, which is more and more towards the tenant side. You're seeing more landlords, not just landlords, but mom and pop owners that have, like, let's say a single family house with a basement suite. They're going, maybe I will leave the basement suite empty and just leave it for in-laws that come visit, just because there's so much concern now about how difficult it is to get tenants. So it's funny, I was just, you know, as we're chatting here, I was reading on Twitter here. This guy posted a story from the tenancy branch there in Ontario, John. He says 2 employees of the Toronto District School Board secured a rental by showing fraudulent paperwork indicating they had $400,000 in savings.
Oh,
They're now being evicted for non-payment of rent, totaling more than $29,000. But despite having full-time jobs, they use the backlog at the LTB to live rent-free.
Yeah,
it's crazy. You know, school board members just
learning the system in Ontario.
Yeah, that's clearly broken, right? And it's like, I don't know, like, as someone that enjoys capital markets, I have a hard time thinking that's a good place to put money. But
interesting. Yeah, John, I think we have been hearing more about fraudulent, not only fraudulent rental apps, but people getting into the business of trying to rent so that they can turn around and rent out again.
Man, we had our sales meeting with our team yesterday. It's the first one in a while, and like the stories of Anastasia and Maria, who are 2 agents on our team, were talking about of like the types of fraudulent apps they're getting, and they look good. It's like, you know, Equifax reports that are Photoshop, whatever. But it's like when you look at it in detail, the data, like it's just they don't line up. There's issues with it. So, you know, and again, these are companies that are in the business of faking employment, creating fake websites for fake companies to make it look like people work there. It's people are going to pretty great lengths to secure a rental that's effectively with fraudulent information. Yeah.
And before we move off the demand side of the equation, another big headline that caught my attention is the leader of the opposition, Pierre Poilievre, now says immigration numbers are the biggest driver of housing affordability issues. He is saying that a future Conservative government would tie the country's population growth rate to a level that's below the number of new homes built. And so that would be quite low, actually. If assuming he means, maybe he means only certain segments. But interestingly, what I found fascinating was that in his long so-called mini documentary on Canada's housing crisis, we pointed out here on the show, he released that back in December, that he didn't mention immigration once or demand. So that's quite the turnaround. Steve, what do you make of the turnaround?
I mean, I think it's politics, right? I mean, I think that, you know, you shift with the political winds. I mean, I think as we've seen over the last number of years is that unfortunately it's all politics, right? I mean, governments will say what they want to say to retain power or gain power. And, you know, I think truthfully, as John and I have talked about here, I don't think there is no silver bullet to restoring affordability. It's a multi-decade long process. regardless of who's in power. And yeah, it's just amazing to see, you know, the current federal government, which is now done a full 180 on the immigration side, when we had people like myself, John, I mean, I think Ben Rabideau, who's active on Twitter. I think he was at one of the housing conventions there, spoke to Krista Freeland about this stuff like 3 years ago and was just basically dismissed. So yeah, I mean, I don't know. I just think that housing affordability is sad to say, but I think it's just a myth. I think it's just politics and people talk about it. Like, I'll give you an example. I think regardless of one's political views, I think I'm fairly agnostic on this, but we've got the BC NDP, and we've got the BC Conservative Party. There's a big election coming up. So the BC NDP, love them or hate them, I think that they've actually done a lot of very progressive work on the housing file over the last 24 months. They have basically mandated multiplex zoning across the entire province, which is like, realistically, if you do want to solve affordability, I think you have to take drastic measures like that. You might not like them, particularly if you're a boomer that's well established in a single family neighborhood. But I think it's the necessary action. And it's funny because now they're falling in the polls. The BC Conservatives are looks like there's a good chance they might win it. And he's really campaigning on getting rid of all that stuff and saying, you know, we want to give the power back to the municipalities and let them dictate zoning. And so I don't know, the people are going to vote. We'll see what they vote for, but it's amazing.
What a mess. That's amazing. Wow.
Right?
All right.
The feds have come out and talked about how good of a job the BC government's done easing up zoning. We've cut them a check for the housing accelerator funds. You know, Ontario saying, well, we're watching BC and we're going to start mimicking everything they're doing. And now it looks like there's a good chance that they might be out.
See, that was back when the Liberals and the NDP party were still friends. I don't think
Yeah.
we might not hear as many messages like that now that Jagmeet Singh has decided that party is over. We will definitely be hearing more and more about, you make great points about, you know, just how frustrating it is that an analysis of the problem, which was pointing to this, the key driver being X, was basically just completely muddied by political talk, you know, xenophobia, you can't mention it, blah, 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 to the point where you then destroy trust in the immigration system, which actually, by the way, causes the most backlash against immigrants or people who look different, no matter how long they've been here. So it actually helps nobody. And then it turns out to be, oops, we all think it's immigration.
I mean, I'll just add to that. Like, I actually don't even think it was necessarily all political for years. I think part of the big problem is we had for years, and I'm going to call them YIMBY economists because that's the best term with them, like the YIMBY being yes in my backyard. So you had a lot of these YIMBY economists that for years were arguing our housing crisis is just about supply. Don't worry about demand. We don't worry about it. It's not a big deal. If you just reform zoning and upzone multiplexes, and allow the types of homes that they have in London, England, and in Amsterdam, if we can build those types of homes, all of our problems will be solved, right? And their narratives really, I mean, at the end of the day, the politicians listened to them. So, I mean, it's like, and this is where I have a tension. Like, on the one hand, you want to blame the politicians, but on the other hand, most experts were making these arguments for years that we can just focus on zoning and we'll all be fine. If you just follow their 300-point plan on changes that you need to make, and if the Ontario government and every province changes their building code and official plans, everything's going to be fixed. And it's only until recently that the federal government, with their latest budget, actually went away from that. So, okay, you know what? Actually, it looks like this population boom's a bit of an issue.
They put their immigration section in the housing section.
Exactly. For like the first time. the first time.
So, but to your point, John, I do think there's political footballs that nobody wants to touch or like just keep passing around. And that's always this idea of immigration, because let's face it, votes matter and people don't like to feel like they're being picked on and not. And so not a lot of people like to go out front with that kind of messaging, especially in Canada, which is an immigrant built economy. But you have a great point saying that. And on top of it, they had a lot of convenient other theories and research to say, oh, it's not even the problem anyway.
Well, yeah. I mean, I think that's the challenge too with Pierre. I mean, Pierre had all the data. I mean, and this is, fine. I'm not gonna. At the end of the day, the liberals screwed up. They don't get me wrong. It has gone significantly worse over the past 10 years, right? But what surprises me about Pierre, he kind of saw this. Like he kind of knew he could have kind of made this an issue a year ago and said, listen, it's not that it's about we don't want immigration. It's just that it's too high. Like you can't have 1.3 million people moving to Canada per year when you only build 250,000 homes. But like, it's interesting that he waited till August 2024 when it's basically a consensus in Canada now that we're growing too rapidly. We're getting to the point. The Globe and Mail had a great column by I can't remember her name, Robin Urbach, I believe, who talked about how, Justin Trudeau's legacy is going to be like shifting the sentiment in Canada from being pro-immigration to kind of not quite anti-immigration, but like moving in that direction, partly because, huh?
Like John, like remember the federal government though too. And again, I'm not saying this is remember we were out there talking about foreign buyers and 2015, 2016 into 2017, and it was all like, well, that's xenophobic. We don't worry about them. CMHC put out all these studies saying they were like a non-issue. And then what was it like? I think trying to think 2 years ago now that they actually brought in a national ban on foreign buyers. And now they have the annual housing, what is it? Underutilized housing tax on empty homes by foreigners. So I don't know. It's such a complicated topic, and I think politicians move when they absolutely have to. They're not like proactive thinkers, right? They're
spare a thought for poor Mr. Poilievre, who is running a Mr. Nice Guy campaign. So no to newcomers. It's not quite Mr. Sunny Ways, but it's pretty much up there. And so
I think it's become very like nationalistic, protectionistic when you. Yeah, I think when you see all the newcomers coming in and you can't afford housing and now you can't find a job and people look for people to point the finger at. And I think like immigration is, I didn't, we're talking about global trends. Like this is a global trend, right? You're seeing it in the UK, you're seeing it in Australia.
It's human nature. It's the easiest thing to pick on or look at people that look different or are different and say that's the problem. Not the, quite frankly, almost all white politicians who let them come in at large numbers.
Yeah, I don't know.
I may point out it's the subjects that get the vitriol, which is another argument for another day. But so this was we've gone on a bit, but I really enjoyed it. Now I hear that there's more juicy debate to come. Do you want to tell us about an upcoming clash between you two before we sign off?
Urmi. so Steve and I actually might be on opposite sides of the debating floor. We're both speaking at a conference. I've talked there a few times. I think Steve's been there a few times, hosted by a company called Veritas. And they do research for big institutional clients, and they host the annual housing conference. And this year, apparently we're the headliners, I think. So the main theme this year is like, a bull versus bear. Will house prices be lower next year? So it's gonna be myself, Steve, Ron Butler, and David LaRocque. And we're gonna be, I think that the idea is the host, Anthony, is gonna be they want us to he's gonna pick one person per side or two people per side, and we have to make the arguments either in favor or against. It's more like an intellectual exercise, so it should be fun.
Well, I'm going to find clips.
We'll see if we can get
tell people what you've been saying next month.
Yeah, it'll be a fun chat.
Yeah, I got to find someone bullish in the room, but I don't know. It's going to be an interesting. Like I said, I think for people that are tuning into this today, I think keep an eye on the fall market, because I think this is going to be pretty telling, because I think the next sort of opportunity to sort of shift gears, if you're looking for a direction change in the housing market, it's probably going to be the spring. So
Mhm.
either it happens in the fall here, or it happens in the next opportunity, I think, is in the spring, because not much goes on in the wintertime.
Yeah, we'll see.
All right, so you have to listen again next month to us. You can follow Steve at Steve Soretsky on X Twitter, at John Pasalis. The show is at Move Smartly. Thank you all for following, all your comments, questions, and your support, and we will be back with you then.